Hello, Warriors. How's everyone doing today? Looks like getting rid of a Fed governor is bullish the dollar. How about that, huh? How you doing, Mike, Steve, Kman, Brand? How are you? Laura, James, you are alive. Okay. Some lady once said to me, I said, "How are you?" And she goes, "Any day that I'm looking down at the grass is a good day." You guys get
Wisdom,
that? Huh?
wisdom. Good morning, Dale. Morning, everybody.
Yeah, so keep that in mind. You woke up this morning, right? And you get to, put stops in. And you want to point out one chart that we talked about Monday. Look at that false breakdown. This is why Blake and Coach love false breakdowns. Anyone get on that rand trade?
I am, but not versus the dollar.
Okay. All right. Well, that was a big one. Maybe the crosses were better. I don't know.
Nah,
No?
nah. Even actually, dollar is a bit better, but yeah, I mean, still rand weaker.
Yeah. Well, I'm trying Aussie down here. It's given up the
Mm,
least. Euro gave it all back, right?
yeah.
All of Friday's gain. Cable, not yet. The smallest correction from Friday, maybe because it was the weakest currency going into it, is Aussie. So I'm trying it here. We could get through this level here at this moving average, and
Mm,
should it looks like it could end up being some kind of flag that would take you. This is what, 80 points. It'd take you 65, 80. This measurement.
mm.
As long as you're going up here, you may as well go for these highs. So, also want to talk about gold because you know I was looking for this 380 breakout. We got it. Actually, yesterday I tried. I had a three drive right here, and I put one on, and it just didn't feel like it was going to get back under 33.80. So I just scratched it, and then looked good. Like, I'm glad I got out, and now here we are. Um, I don't know if it's a buy here or not. Uh, I'm a
I
little.
um, I think
That
it's
doesn't
still
look too good.
I think it's still looking good. Much better than silver, in the short term at least. But we will need to do a bit of clock watching today, right? Because we're trading value data month end, and there may be some US corporate activity that puts the dollar just that little tad higher into the 4 p.m. London time, which is in 3 hours, but just on the tip of my toes as well. I agree with you on gold, and gold is still looking better to me. I think this we've seen this dollar buying, but gold is still holding relatively well, right? So we haven't, as you said, euro lost everything. The rest of the currencies also, the dollar is doing better, but gold we are still hanging around yesterday's levels, which yeah, and we
So this is yeah. So this is what Kate's talking about.
yeah, we left that level untested, so I think it's still looking better. And maybe towards
That
the end of
was
the week,
Tuesday.
we will see the move up above 3,400. It's
Okay.
kind of what I'm looking for still, for as long as we hold those 33.50s.
You have a vibe on the yen. It
Um,
really.
Really, it's I've been talking about it as well on the Flow Show, and well, first of all, if you look at the dollar yen, it can't stay under 147 for now, right? We've had
Yeah.
yeah, that little spike there was powerful, but then even since then, I mean, 147, 147.10 can't stay below. Some of it. I think there's two reasons for that. The one is that if you look at the yen crosses, they still don't really want to give up much. And let's not forget that US, even if the US says it's a done deal, that Japan still they haven't put the trade deal to paper. I think that's one of the reasons why yen is not too bullish. But also, I think there's some mechanical pushing up dollar yen, and that's the steepening of the US yield curve,
Okay.
which is usually a factor behind a bit of dollar strength mechanically. Now, I need to really, how shall I say, caution that a little bit because it happens in a bull steepening scenario, which no bear steepening. Every time I misformulate that. Um, so it happens. No, it happens in a bull scenario. Bonds are going up, the yields are coming down, and I think it would be a stronger push behind the dollar if it would happen in a yield curve where the whole yield curve rises instead of the short end coming down and the 10-year hanging where it hangs. I think the opposite would be a much bigger bid, put a much bigger bid under the dollar. If it would come with yields rising along the whole curve. So I'm a little cautious for the viability of this dollar move, to be honest.
Well, Canada's, looks weaker than the yen because
I
the yen's already
just
taken
hanging
out
there.
this. Yeah, so I think it's still, if you're bearish a dollar, I think that there's a sale coming here in
Mm,
Canada here. Maybe once 880 first. Anyway, I'm trying the yen up here. To me, it looks like an ABC retrace
mm.
move, and I'm wrong over the highs. Okay,
Yeah, I mean
so I'm trying to.
the highs are relatively clear up there, 149. If that goes, that probably that's 150 is around the corner, and so they don't need to fight that in the end. But yeah, I think if for a counter trade, as I've said in the room as well, I'm rather looking at where we can end up around 4 p.m. London, but I've actually already started small long cable, and I think cable is looking okay for as long as we hold above that 133.6580 or so.
Yeah, yeah. Okay, so this could be an ABC high or low,
Mm.
and we could go from here. It
Yeah,
definitely looks.
134.20 holding already good in the short term, but we need to look at it just slightly wider, I think. But yeah, I think it's worth a try. And the Aussie is the other one that I have on my radar too. I really want to see where that ends up. But I agree with you. So far it can't stay above 65, but if it goes, it's probably gonna go another percent or so.
Yeah. Okay. Uh, any big news events overnight that we should
Um,
be aware of?
well, the problem with the euro is that French overhang, and
What is the French overhang?
well, the Beirut they have a problem with their budget, right? Nobody wants to vote for the prime minister's budget, Beirut, and he called for a vote of confidence, which, if you listen to all the other parties, he's going to lose. So there's going to be another government crisis coming, as if the prior one was solved. But the worrying thing, and that has really weighed on the euro as well this morning, is that yesterday's French finance minister said that if they can't get the national debt under control, which is rising very quite sharply right now, they may need IMF to get involved into France, and that is never good for the confidence in a country, being it the second biggest country in Europe after Germany. That is, I think, what is weighing on the euro right now as well, and why one of the reasons why euro went down faster than other dollar pairs.
Yeah, well, like Martin Armstrong says, the epicenter of the next crisis is Europe. I know you love to hear that.
Yeah, usually those people, rarely get proven right, because Europe is a much slower mover than in general than US, for instance, which is a much more dynamic economy than the European. Of course, with Trump, things can change, but yeah, the problem in Europe is very often yeah, the political side, and now it's even more so. French, Germany was not
Yeah,
obvious. In Belgium, they can't find the government for more than 3 weeks. So it's yeah, it's a bit of a political mess in Europe.
yeah. I would check out Martin Armstrong before I would say he's one of those guys. You know, that guy, I interviewed him a few times, and he actually went to jail. I remember when he was on Kman radio, and there's a book out about it that the government wanted he has a system based on pi, and it kept nailing things, so the government wanted the program. He wouldn't give it up.
Mm.
Anyway, he's out there, and I've seen a lot of in broad strokes. I listen to what the guy has to say. Anyway, let's talk about risk. We finally got a rally going late in the day in S&Ps. You know,
We have Nvidia
we should
today.
be a yeah, Nvidia after the close.
Mm.
Um,
That's
if
probably going to drag the whole equity market in US around, right? Not only
yeah,
tech.
if Nvidia gaps up on earnings and makes new highs, like say 195 ish or so, I'm going to fade it. So that's my plan. If it's, but you know, it could be up 10 in the aftermarket, and then by the time we open tomorrow,
Mm.
it may not be there.
Mm.
So anyway, being an options trader on these stocks doesn't give you a lot of flexibility. You have to take the shot before or wait till the next day. Um, anyway, let's look at S&Ps. Not that far away from new
Yeah, that's
highs
why
here.
I briefly looked at them as well on the flow show. I've got like some kind of a line coming in there, which I think today is around, what did I say, 63.70 or so. But for as long as we are above there, I don't see anything tradable to the downside, to be honest.
Yeah.
Well, and we got
I,
Nvidia tonight.
Well, that's what
I,
we just said, Blake. Yeah.
Oh,
and
okay.
I'm hearing some numbers in the 6,600 handle region for the end of this wave.
Well, the more you hang towards those tops, the more they knock on the ceiling,
Yeah.
the bigger the chance the rocket takes off again. So where
Yeah.
do I have it? Yeah, exactly around 63. I call it 65.70 is my support line on the S&P coming in.
Okay.
Back below there, the picture may start to change, but not before.
So
So
Dale,
the
the previous all-time highs to Liberation Day lows, which is obviously a reactionary day. It's a day
yeah,
that had the whole world's attention. That
right.
low, the 127% extension is just about 75 points away from where we're at, roughly.
It's 530,
It's the
550.
first extension out. So yeah, it's 65.25 to 65.50, depending on what contract you're looking at.
Okay.
So it should be on everybody's radar because that was a day that absolutely 100% mattered to the market is that low, if that
Okay.
makes sense.
All right. If you want to show your chart, I
Sure. I mean,
surrendered
we've
it.
been talking about wave five completing there for literally a
Yeah.
couple months now. So if you guys don't know where it's at, everybody should know where that level is at. And if you take the previous all-time highs, right, which is right
Yeah.
here at
Right.
6150, roughly 6160, again, depending on what you're looking at.
Yeah.
Liberation Day lows, first extension comes in at 65 and a quarter, 6550. Kman, if you're looking at some sort of trend line, it's probably the underside of this broken trend line from the last couple of years. It comes in right around, 65.50 or so. There's so much resistance up there. That's why that if we get any move higher, especially following today's earnings out of Nvidia, you might see a reaction there. You might, it's one of those days where Nvidia earnings are really good, or at least you think they're good. The market bids up post market. Nvidia bids up pretty good. And then we wake up tomorrow morning and we're like, why is Nvidia down? And no one knows why. It's like, wow, there was great earnings and then Nvidia is down, S&P futures is down. And, we might get one of those spikes up there today after the close. And I think everybody needs to be aware of that. I mean, um, how many times, Dale, have you said, wow, those are great earnings. Why is the stock down? Or, wow, those are horrible earnings. Why is the stock rallying today? That's the level that you might see some reaction. And I think that everybody needs to be aware of that.
Okay.
I've posted that line I'm looking at in our chat room, Blake, just for your info.
Okay. Well, if you're in the Forex Analytics chat room, let's see, Kman just said the red line, Blake. This is the one he's looking at.
See that number of touches?
Yeah. The fact that we went through there so aggressively, I don't know.
And bounce.
But yeah, I mean, maybe on the downside there would be
You're
some
looking at
support
false
down there.
breaks?
Sure. I mean, I'm not even worried about. I'm not even worried about any downside just yet until we start putting in some lower lows. I'm looking for upside resistance at this point, where it's higher highs and higher lows have been consistent with this market. So, downside support. 50 DMA has been a nice like how should I say, trend filter, if you will. So as long as we stay above that, that's a 618 retracement. There's definitely support on the downside, but we haven't seen downside in so long that it's like, okay, well, let's see where topside's going to take us, which ushers in like another point of view. And Kman, you mentioned that there's today's corporate month end, value date, if you will, for some of you guys that deal with corporate month end. The dollar is in demand at the moment, but it's taken the euro down to some pretty key levels, and other currencies too. I mean, if you follow, like, for example, the Kiwi. The Kiwi is at a triple confluence and channel support down here. Major support in the Kiwi. And if again, if you're a Forex Analytics subscriber, you're getting all the updates on, how big of those levels are and where all the confluences are. It's like, I don't know if I'd be on the short side of the Kiwi down here. Like, why wouldn't you want to take longs while it's above 86 cents? And you had decent CPI data out of Australia last night, actually pretty strong data. You look at the Aussie, it still looks really constructive at this point. I mean, there are certain currencies that look relatively attractive on this dip that the dollar has given us today.
I agree.
The dollar. What were you saying, K-Man?
I agree.
Yeah. I mean, I think you can, whether you're like K-Man, you're picking up sterling as we're at the 38% retracement. As you can see here.
Then I ask you guys something that I do. Say for example, you don't have clarity on a few other instruments, but they're somewhat related, and you have clarity or at least conviction on one instrument, and you know that when that instrument gets to a level or a target, you could probably use that for example, I believe the end's going to 145. Okay, so I still think that's going to happen. But at 145, so I'm not sure where a lot of the other stuff is going to go or where it's going to be if the end gives up three big handles. But that's where I would be buying the dollar after that. Okay. So wherever other stuff is, once the yen if it gets to 45, is when I'll be fading the dollar. So, So
Yeah,
anyway,
well,
I'm
I
buying
agree
the
with that,
dollar.
Dale. Is you got to find levels where you want, and this is something that, we tell our traders every single day. Know where you want to be involved in the market and figure out how the market's going to get there. Try to figure out what's it going to take to get the market to where you want to be involved at. And once it happens, then you got to ask a couple questions. How did we get there? How quick did we get there? Why did we get there? And if it's just from a correlation standpoint, oh, the dollar was dragged lower to this level,
Right. Yeah.
across the board, and it really was not yen related. It was more just like a broad-based dollar move for no real reason. Then you get
Yeah.
involved, so
That
you got to know the whys and also the timing. Like that's why I'm very reluctant to put like long-term target levels to be involved in a market because I mean, shoot, let's say I wanted to be, short the euro. Like this is a great example. I personally want to be short the euro at 120. I want to be short the euro at 120. But let's say, um, you know, this is like the level I wanted to be there. It's silly for me to leave an order out there because if let's say Fed chair fires Powell, like just has all of his personal belongings from his office set out on the
Moved
side of the
in
road
a
by President
box.
Trump.
In a
We're going to
box.
be trading at 120 quicker than you can say, holy crap. And I don't know if I'd really want to be short in that situation. So, I try to know where the levels are at, set alarms for those levels once we get there. And then you have to ask why we got there. How did we get there? And then that's going to let us know whether we should be trading at that level or not. What do you think about that, Dale?
Yeah, I think that it's all good advice. I was more talking about, say, you didn't have clarity on another instrument, but you have clarity on one. And you know that, if the yen is going to trade down to 45, I would expect that there would be some dollar weakness along with that.
Yeah.
Okay. So
yeah, I mean,
if I want to buy the dollar,
mm,
I'm going to wait for 145 yen to get there because I'm actually looking to buy the yen down there and get long the dollar. You see, so I don't know where euro's going to be
yeah.
when the yen is at 145, but that's when I'd be looking for a sell. Do you know what I mean?
Yeah.
Yeah, but
So,
the
yeah.
issue is looking for the right correlation in this case, and I'm not 100% sure that yen is your best correlation because the yen could lead
Yeah.
its own life if you have either a Bank of Japan that moves or they finally get a deal signed between Japan and the US. US says that the deal is done, but Japan hasn't seen the first line on paper yet. So I mean,
Yeah.
the yen now, I use the yen as a correlation point for others. I think is probably a little dangerous maybe, but yeah, of course. I mean, if it's a global dollar thing, then you can probably rely on it. I mean, if you take a 2% move from where we are, taking it down to 145, that's 2%.
Yeah.
Add it on to a euro dollar, you're back at 118, a little bit above.
Okay.
Yeah, could
Okay.
could be could be your level, but then it has to
But
go via the dollar, not via the yen, right?
Okay.
But by the way, I'm
Yeah.
sorry to interrupt here. Besant's on his daily road show, trying to hawk shit as we, he's got a 5-year auction today. He's got a 7-year auction tomorrow. So he's out making his rounds, and he said Besant says a U.S. stake in Nvidia seems not on the table, which I have opinions about Intel and U.S. taking a 10% stake in Intel. And did we have this conversation yesterday, Dale, about
No,
the car companies,
we were talking about the
Fannie and Freddie?
no, we were talking about the Fed governor yesterday.
Okay, well, yeah,
Every day is something.
I was having a conversation with somebody yesterday, talking about U.S. taking a stake in Intel, and then
Yeah.
the difference between taking a stake in GE or excuse me, General Motors and Ford and Fannie and Freddie back during crises. We're I don't know if you guys have noticed, but we're actually at all-time highs right now, and unemployment's relatively low. yet we're taking stake in Intel. And I understand from a point of view which the Trump administration is making on, security. But I don't like the fact that we have our governments taking part in investing into private companies. That's a little scary to me, and I think that's one of those things that's going to eventually start to weigh on, the whether you're talking about the dollar, you're talking about long-term income products, whether you're talking about treasuries or anything else. I think it's a little scary when these conversations are happening right now. So I think it's something that we need to pay really close attention to, and that those are the types of things that I hear it and I start thinking, man, can the euro really get above, 120 at some point later this year? And that's the kind of stuff that kind of freaks me the hell out. So Dale, what do you think about all of this? This is like unprecedented stuff. I know there's a lot of unprecedented things that are happening right now, but this is one that really has my attention at this point.
Yeah, it's a very strange form of capitalism, isn't it? But what
What
bothers me,
capitalism?
yeah, that's what I mean.
Yeah.
But what bothers me more, Blake, because I know, and this is why we're here, it's money, the militarization of our cities and threatening to send, I don't know about you, but I kind of like
Yes.
walking around without federal troops or National Guardsmen or on the street corner.
Yeah, that's another thing that we talked about yesterday, and again, it's a culmination of these things of, look, I understand the trolling of the Fed chair, but this is, it's been pretty extreme, and then he's
Yeah,
finding reasons to fire Fed governors, so you're slowly taking over the Fed. Yes, militarization of our major cities. Again, make excuses however you want. Oh, it's, unsafe or out of control. Look,
it's been unsafe for since I was a baby,
yeah, I mean, is it
and that was a
necessary to be
century
employed?
ago.
Right. You got between that and I mean, there's a lot of things that are happening right now that is really, really needs the market's going to start to take, we need to start paying really close attention because things are happening. And I mean, a lot of people, will come to you and just be oblivious of everything that's all happening, but it's all happening at once. And that is a little frightening to me anyway. It's just something that I think that needs a little bit of attention. One of the other things I did want to talk about, I know we have not a lot of data that's coming out today. So I wanted to talk a little bit about what's happening in commodities. Copper is starting to break. Now this is a flag pattern, however you want to look at it, but this is just a bearish consolidation after a really nasty breakdown. And you guys all know this is all following the tariffs or lack of tariffs that are coming on copper. I just want you to be focused on copper. If we start breaking back below this 425 level ish, that's going to get, kind of nasty. Crude oil also stopped at a 38% retracement. So the bounce, was only sustained at $65. So watch crude. Trump is talking about crude. It's only a matter of time before it goes below 60. I don't think he's wrong. And technically, it still looks like we're pointed towards, the mid 50s, frankly. I know Kman was talking a little bit about gold. It is holding up very, very well, but we're at the upper end of the range. I would think, so the top end of the range is somewhere at that 3410 level is the level that, we've been looking at on a pretty much a daily basis. In gold, you can see 3410 is right here on our bias chart. That number's been there for the last couple of weeks now. So I think we're at the upper end of our range. So be a little careful with it. So, and it just kind of coincides with what you're seeing in the dollar, at least today. And the other thing I wanted to point out is that we have Bitcoin still trading really heavy here. It's consolidating below the 112,000 level. And if you don't know why that was such a big level, well, that was the previous all-time high. So Given the fact that we've spent now the last 2 days really below 112,000 is a bit of a risk for the bulls. So I think it just opens the door for a move back to the 200 DMA, which is just above 100,000. Which that from current levels that's about a another 12-13% move lower. So just keep that one in mind too, because that could elicit some volatility in the markets if that does happen. We just have a couple. Well, actually, Dale has his interview with Jim, the vixologist, which thank goodness we gave him a little bit of a reminder today because he is here. Kman, what are you looking at today to trade at this moment, being value day?
Yeah, I think, as I said, I just bought a little bit cable, but I'm looking to see if we get closer to that 133.90 at some point over the day to add. I've got my long gold still running because I do think that we are going at least for a test of that 34 figure 10. Could be towards the end of the week. I don't know, but I think we are going to get there. I'm less impressed with the euro, so I may just leave it unless we are seeing it low enough to give it a counter try. In the meantime, we're still in the range, and ranges are tradable, right? Ranges are tradable. If you think or assume that we are towards the bottom end of that range in the euro, what is it, 115, 40, 60 or so? It's a tradable range if you then see what we did with the tops in the 117 and a half, even 116.60 you can trade against. So now there is a bit of range trading to do, but on the directional stuff, yeah, I think cable. I do keep an eye on the Aussie to see if it finds a bottom as well. That's basically it for now. And I've
Well,
got
if you want to know what we're doing, like specifically, I know Ryan's out right now, but Kman, he's posting what he's buying in cable, and you can see that I got long the euro a little bit ago, about 30-40 minutes ago. All you have to do is be in the chat room. You can see what us and a lot of other traders are trading right now. So that the best way to do that is just be a Forex Analytics subscriber. Remember, it's our summer sale, and summer is over literally in just a few days. Lock in your 40% off. It's the prices we haven't had since 2019. So once you're in, you're then grandfathered when prices go back up again. So we've been offering this 40% discount for the last couple of weeks, but a good thing like that doesn't last forever. Dale, I'm going to let you take
well,
Jim.
I wanted to let you know that the president wants a 10% cut on our summer sale.
Yes, just an extra 10%. Why not?
Yeah, okay. So anyway, so that we're donating to the national good. Anyway, Kman, Blake.
yes, coach.
Yeah, thanks very much. It's kind of I'll be so glad when this week is over. How about you guys?
Yes, I'm excited for the new trading season that starts
Yeah.
after Labor Day weekend. That's what I'm ready for.
All right. So to prepare for what might happen um, next month, and we have a lot of complacency. We've got Jim Carroll with us. Hiya, Jim. Welcome back to F.A.C.E. And you had a great idea when your interview was announced. You put out a question to what people would want to hear about. And I think there's a few things you're going to present that came from the X community. How you doing, buddy?
Good. How are you?
I'm doing okay. So is the VIX going to 12 during this meltdown?
Well, let's find out.
Okay. So if you have an interest in the VIX, here's a guy with a doctorate in the VIX. So let's see what you have for us, buddy.
Yeah, I actually am good friends with the true Dr. Vix, a guy named Russell Rhodes,
Oh,
who does have his PhD
okay.
and has a lot of experience going back to SIBO days. I originally met him when I went to SIBO to take a seminar on volatility that he was teaching. This is going back a long way, and he and
Yeah,
I have been buddies ever since. But yeah, no
cool.
PhD for me, but I've learned a little bit, um, you know, paying attention to markets and people like Russell and a number of others. So anyway,
Yeah, and
yeah,
I've seen your Vixometer.
the
Yeah,
VIX mix, it's
yeah,
coming.
yeah, and I've seen it show caution
Hmm.
before we've had some pretty good sell-offs. So I think it's a great tool that you developed, and it gives people a heads up.
Well, I appreciate that, Dale. And the question now is it okay to go back in the water? Um, let's take a look. Uh, disclaimer, disclaimer, disclaimer. So, the question right now is, has volatility finally gone back to sleep, right? We're down below 15. 16 is, if you believe the rule of 16, a 16 VIX says that the S&P will average a 1% move over the next 30 days. We're not seeing 1% moves. So, we have definitely seen the VIX come back. I've highlighted some of the recent episodes, but it seems like we're back in safe ground.
Right.
This is one look at what the VIX mix says, and to your point, back in basically starting in January, we couldn't get a green reading even as the S&P moved higher into the end of February. That February move
Yeah.
was, a high for SPX. But the volatility world, as I look at it, was not confirming that with a bullish reading. And sure enough, we had, an initial sell-off, a little rebound, never got back to green territory, and then the tariff tantrum sell off to the bottom in April.
Yeah.
As things have recovered, we've been getting a lot more green readings,
A lot.
and
Yeah.
so it would suggest that people are feeling better. You used the word complacent. There certainly could be some complacency because we're back to buying the dips. We had that one uh, scary dip on the jobs report
Right.
back in right at the beginning of the month, but that's in the rearview mirror now. We've had a whole bunch of green shoots at the right side of this chart, and so people seem to be feeling pretty comfortable again. The latest reading from last night of this composite, and it's a composite for those people who haven't heard me yap about this before. It's a composite of 17 different component indicators that I track, and then roll up into this single gauge. We're at 75% solidly in bull territory, picked up 4 points yesterday. Um, if we look at the SIBO term structure. I like to use this as a picture of the term structure because when we look at VIX 9-day, VIX 3 month, 6 month, 1 year, we're looking at constant maturity measures of implied volatility, where the futures, and I'll come to the futures, but the futures, roll. And so every day we've got a slightly different picture. But what this shows, and it's actually kind of obscured, but if we go back to that mid-February high for the S&P, this term structure was down low. We got crazy with the tariff tantrum. We had VIX close at a level above 50 on April 8th. We've come all the way back. So, it's as if the tariff tantrum never happened from the perspective of the SIBO volatility term structure. Likewise, if we look at the VIX futures term structure, this actually kind of obscures the current level of contango. We've got a good, 4 to 5 points from the low to the high, and that level of contango is up in the 90s in terms of percentile spreads going back to when the VIX futures were introduced in 2004. So contango is back. It's a tailwind for people who want to short volatility in one form or another. And, so it's a much healthier look than what we saw at the peak of the tariff tantrum. Sorry about that.
Okay, I want to ask you something, Jim, that,
Sure.
August, pretty quiet month, so you
Yep.
can understand complacency and no major moves, although last year, yeah, we had the bear
Yeah.
raid with the yen carry trade. Is there anything that you could see that says September could be different than what we've seen throughout the month of August?
It's hard to pinpoint anything right now. And if we look
Okay,
back historically, August, September, October, can be more volatile months. We had the the August problem last year. If you go back to 2015, 2011, we had huge VIX spikes surrounding specific events during those time frames. Um, we're living in a crazy world where things can change rapidly, and the level of calm, given all of the shenanigans that are going on, most of them emanating out of Washington, D.C., is pretty remarkable. I mean, it's the resilience of investors to say, hey, that's all just noise. I need to keep I need to keep
yeah,
invested. I need to keep putting money in the market. Otherwise,
yeah,
I'll get left behind. And if you're an advisor, as I am, if you're too cautious,
right.
you get
You get
fired.
fired. Yeah,
And
yeah,
and so there's a there's an impetus to be invested, be active, um, and uh, we'll
Ro
see how that works
just
out.
just keep rotating.
Oh,
I mean, everything's. I don't think any of these money managers, when they liquidate something in the old days, they would go to cash and wait
mm-hmm,
for their next trade, right, to deploy it. But
right.
now it seems like the same day, or probably maybe even simultaneously, when they're liquidating something, they're buying something else right away.
I think that's true in many cases. I think the other things that we're seeing, I mean, look, at least in this environment, cash is yielding something. So you can, take a little breath to determine where you want to redeploy. The other thing that we've talked about before is the rise in so-called defined outcome or buffered ETFs, structures that we used to call structured notes or structured products. And so the advisor community has definitely uh, picked up a lot of momentum, uh, putting assets into these, you know, um, option overlay strategies where there is some element of protection embedded in the structure. And so I think that's the other thing that we've seen. And it's certainly the other thing that has had an impact on the whole volatility complex, because generally, those structures are selling premium. They're selling volatility in one form or another. And so that's part of what has led to the VIX futures term structure, as an example, returning to a level of pretty steep contango.
Okay. So what was the question that was asked? Oh, good. No, go ahead with the.
No,
Go
yeah,
ahead.
let me just rip through a few more. So if we look at where we are now and where we came, this is one of the things I look at is just, how volatile is the price action of the S&P 500? And I like to look at that using average true range, and average true range is a percent of the S&P price to make sure that, we're getting comparable readings over time. Go back to COVID, we saw this spike to 5.5-ish%. The tariff tantrum was 3.5. We're now back down below 1, and it's below 1. Where we get sustained periods below 1, tend to be synced up with strong bull markets. So, we're back down below 1. Are we going to stay there? We'll see. But, to the extent that we can stay below 1% in terms of the average true range of the S&P, that's a good sign for the bulls. Looking at that with and adding in the VIX, when we have the S&P volatility down below 1, and we have the VIX also down below 16, again, that the combination of those two things, it's almost always going to be, bull market conditions. And you can see there are a couple of places where I've highlighted in yellow, where we've kind of got mixed signals. Yeah, the VIX is back down below, but it's had a couple of little bumps along the way. If we can settle out in a place where VIX stays below 16, maybe just muddles around in the low teens, and the S&P volatility stays low, that would bode for the market to continue higher. We shall see. This is just one of the things I keep an eye on to tell me, kind of give me a sense of the temperature of the market.
Okay, so we're getting mixed messages right now.
Yeah, right now we're getting mixed messages. So this picture actually goes to one of the questions that came up when I asked people for questions. And it's, for me, it's kind of an actionable picture of the volatility term structure. And what it's doing is it's taking two snapshots of the VIX futures. One is the medium term VIX futures, and the other is the short term VIX futures. And these, are have been turned into exchange traded funds. VIXM is the medium term, and in this case, I'm using VIXY, the VIXY, as the short term. And if you look at the ratio of those two things, and there's some logic behind it, when that ratio is trending higher, it tends to coincide with the market being just fine. And when that ratio rolls over, it tends to coincide with the market not doing well. And having some background in technical analysis, I can slap some moving averages on there to smooth things out, and then look at the relationship of those two moving averages. And, it's kind of a quick way to just kind of see where things are, what the conditions look like. Excuse me.
Jim, that at the lows that we had, the green moving average was way below the red line, and now we're way above the red line.
We're kind of stretched to the upside.
Yeah.
So this is one of those things, Dale, where you say, okay, when you get that low, as we were in April, you can't be surprised if you've kind of stretched to the downside. And conversely, when you get stretched as wide, it's kind of like the crocodile opening its jaws.
Right.
You might want to just take a pause and reflect on how you're positioned, whether you might want to put some hedges on, take some risk off. It can go on for a while. Obviously, this thing turned positive the 1st of May, and it has been positive ever since. And certainly, if you've been long the S&P since the 1st of May or short some volatility since the 1st of May, you've been doing pretty well.
Yeah.
So, as a quick and dirty temperature gauge, I like this one, and it uses, you know, basically two spots on the VIX future term structure to, come up with a picture. I won't call it a signal, but a picture.
Okay. Yeah, I mean, that's a pretty big gap between those two. It's saying, you know, smooth sailing ahead.
Smooth sailing ahead, yeah, and um, so this is another look using, instead of the VIX futures, looking at the SIBO term structure, and basically saying, okay, if I compare the VIX to the VIX 3M and the VIX 3M to the VIX 6M, and how are those ratios behaving, and where do those ratios tell me that things are either good or bad? I've highlighted the places where they suggested that you might want to take some caution. And this goes back, if you go back to July of 2024, people thought, oh my God, this is over. Now, this thing happened overnight, this yen carry trade thing. Well, the SIBO volatility term structure was, had a yellow light that blinked on in early July. And, it was basically telling you this is going in the wrong direction. I mean, it was, even as the market continued higher, this was saying people are, taking some risk off the table. People are hedging. People are moving that volatility term structure to a more defensive place. We saw something similar in the run up to the election, right? That turned out to be, kind of a non-event. A very quick move surrounding the December Fed meeting that took people by surprise. And then, coming into the tariff tantrum, from that high in February,
Yeah.
at that high in February, this thing was saying, watch out, guys. This could go the other direction. And certainly in the tariff tantrum, we had a peak. Right now, it's basically saying, don't worry, be happy.
Yeah.
They're both moving down, and there's a wide spread between the two of them. So this is another one where, I can quickly look at this and say, as scary as all the headlines are, the volatility term structure is not too worried.
Okay.
But if that turns up,
okay.
I'm paying attention.
Okay. Jim, you've been in the business long enough to know that, when the money comes back to the table, that if they want to buy something, they're pretty good at engineering a decline so they could accumulate. And vice versa, they want to get short, they can engineer a rally to distribute. So I think we'll have some answers next month. Personally, I'll be glad when this month is over and there's more liquidity in the market, and
Yep.
that way your
Yeah,
stops don't get run. Go ahead.
yeah, and I'm not one of those big guys, but my experience is that, if you know where to look for the breadcrumbs, you can find a trail that suggests what might be going on, and act accordingly. This is
Okay.
another similar view. This uses the VIX futures, and something that, so I said earlier that the problem with the VIX futures is every day, the front month is one day closer to expiration. So, comparing the VIX futures to the spot VIX, which is a constant 30-day maturity, is, you got to manipulate the data. So I use something that I call VIX 30, which basically takes the front 2 months and weights them to give me a 30-day maturity VIX future. I call it VX 30. It's we'll come back to it anyway. The spread there, we would expect the VIX futures to have a premium to spot VIX. And what this is saying is, we recently got to the 98th percentile. You were talking about the spread on that other
Yeah.
chart. This is
Yeah.
the same idea where, it doesn't get much better than that.
Yeah,
The bullish signal from that, has kind of tapped out, and we've seen it come back in a little bit. It's still in the 90s or the high 80s, so it's still signaling that conditions are bullish. Um, but they got to a place where it was hard for them to get any more bullish.
right. Okay, so that's how we had that little sell-off, and it happened around the employment number revision,
Yep.
right?
Yeah.
Okay, all right.
So, so I did ask for some questions and I picked a few. Where can I get VX30 data? The answer is nowhere, at least not yet. There are a couple of different ways. Russell Rhodes and I calculated slightly differently, but we basically come out in the same place. But it's a data point that would be useful for people to have, but nobody seems to care enough to actually make the data available publicly. And I'm not going to go into the data publishing business. So, if you want to know what VIX30 is doing, follow
Subscribe.
me on
You give,
Twitter. Yeah, follow me
you
on
could,
Twitter or subscribe to
you,
VIXology.
yeah, you could say that's not a dirty word.
So, who trades VIX futures was another question, and the answer is, uh, there are certainly a number of hedge funds, who are going to use VIX futures either to express a short volatility bet or to hedge. They might be using VIX futures in combination with options. And remember that the options settle to the futures, not to spot VIX. Spot VIX is completely untradeable. So if you're trading VIX options, you better recognize that your underlying is the futures, not the spot. Um, we also, have the exchange traded products, and it seems like we get a new one every month. Um, and most of those use the VIX futures either to be long the futures or short the futures as part of the package of holdings behind the exchange traded product. So SVIX, UVIX, UVIXY, SVIXY, all of those guys are using VIX futures as the portfolio, as the underlying portfolio. Why should we
Okay.
care about the middle of the VIX futures term structure, months 4 to 7? This goes back to the chart that I showed. Let me just dial back to it. This goes back to right here. This is basically comparing that middle part of the VIX futures term structure to the short end of the VIX futures term structure. And so the reason that it's interesting and useful to pay attention to the middle of the VIX futures term structure is, it can give you some guidance as it changes relative to the short end. It's given you some information about how people are changing their positioning. How do
Okay.
you know when a volatility spike is over? You don't.
Right. Yes.
Now you can throw some math on whatever you want to look at, whether it's spot VIX, the VIX futures. You can say, as you and I were discussing, has this gone about as far as it ever has gone historically? And so you can, you can begin to get a sense of whether something has gone as far as it might reasonably go. But as we've learned in episodes like COVID, in the tariff tantrum, certainly spot VIX and the VIX futures and the SIBO, indices can go a long way pretty quickly. And there's nothing to say that they can't keep going um, in the short
Yes.
term.
Yeah.
You know,
Ad
what I
infinitum.
Yeah, what I say is, look, if you're lucky enough to spot a VIX spike, coming,
Yeah.
and you're in a trade that's going to benefit from a volatility expansion, um, you can't know how far it's going to go and how long it's going to last. You just
It's like
can't.
it's a top pick, and
You,
you can't know.
yeah, so what you need to do is you just need to have a plan,
Yeah.
whatever your plan is, and assume
But
that you're
but
not going to get.
the major purpose you put all this time into is not for knowing when the volatility spike is over, but to lighten up on risk before risk off happens. Is that correct?
I think that's a good use for the work that I do is to have a better sense of what the conditions in the market are so that you can assess, how much risk you've got in your portfolio and whether you're comfortable with that risk. I say, look, even if you're a long-term investor, you're a buy and hold investor, just having the peace of mind that says, conditions are good, or to have the peace of mind to say, there might be a wobble in here. Either I just sit tight and ignore it, but I don't get rattled by it. I don't make a dumb decision because of it.
Yeah, you're not getting longer.
Yeah. Yeah. Or you could say, even if you're a longer term investor and you're periodically putting cash in the market, so maybe this helps you decide when you're going to put some cash to work. Here comes a dip. Let's put some cash to work. So, whether you're a day trader or a buy and holder, it seems to me that having, some methodical sense of what market conditions look like is valuable.
Okay. And your favorite
Last
way
question,
to
what's your
trade?
favorite way to trade volatility and why? I'm kind of an outlier or an outsider in this regard because, the smart kids trade the futures, the smart kids trade option structures, and I prefer to use the volatility exchange traded products, in both directions. If I want to be short volatility, my favorite product is SVIX. I know the people who created it. I helped them in that process. And on the other side, whether it's VXX, FIXI, UVIX, add spice, to your particular taste.
What's your average hold on any of these positions you take?
Well, it varies dramatically because if we go back to this, you know, you could have been short volatility if you bought SVIX on May 1st and have continued to hold it, you're up. I think the last time I looked, you were up more than 60%.
Yeah.
That's
Okay.
pretty good.
Yeah, it is.
If you're trying to trade one of the drops in the market, one of the spikes in volatility, that holding period is going to be,
Shorter.
days,
Okay.
weeks at the most.
Okay.
You're not holding that position for terribly long. And that's why it's important to have some thoughtful exit strategy. It's one thing to get in the trade. One of my mentors, Van Tharp, may be a familiar name to some people, was famous for saying, it's not the entry, it's the exit. And so if you don't know how to plan an exit from a long volatility trade, you're going to kick yourself because the max profit will be disappearing while you're trying to think about how to get out.
Okay, Jim. So, Jim, you have your Substack letter. You could be
Yep,
followed on X at Fixologist. But what you really do is manage retirement money. Is what your major, not just retirement money.
correct.
You manage accounts for people that this is their way of accumulating wealth, and you do it as an RIA, correct?
Yes. Yeah, Ballast Rock Private Wealth is the firm that I am part of, and we work with high net worth individuals, families, trusts, donor advised funds,
Okay.
all manner of vehicles to help people grow and protect the hard earned wealth that they've created.
Okay. And
So,
uh,
on the screen is my email and
yeah,
the Twitter and the Substack and
take a
uh,
screenshot, everybody, because I can say this, Jim. How many portfolio managers would have a background in risk like you do through your studies of VIX products? Or let me put it this way, how many portfolio managers even know about VIX? All right, so
Well,
there
you know,
I rest my case.
most of them are familiar with the term.
Yeah,
And
yeah.
99.9% of them haven't spent, 2 hours
For
paying attention
them,
to it.
their risk off strategy still, Jim, after the bear market we've seen in debt and debt instruments,
Hmm.
a bond portfolio is still their risk off position.
Right.
Okay, even after 50% haircuts in the last several years.
And
So,
and I suspect that even when the Fed reduces interest rates at the short end, and it's a when because I don't know if Powell's going to do it in September, but Trump is re-engineering the composition of the Fed. If people have not seen the tweet that Jim Bianco put out yesterday or the day before, go find it because he maps out all of the ways that the current administration can essentially
take over the Fed.
take over the Fed and either minimize its impact or control its impact. It's a little frightening. We should be frightened, but I suspect that to the extent that the Fed tries to bring the front end of the term structure down, the bond market is not going to just follow suit at the medium and long end. I think there's a very real possibility that they lose the long end and that
Yeah,
people who have long duration bond portfolios are going to get another kick in the what.
yeah. So more duration risk ahead with what's
I
going
suspect
on
there will be.
at the Fed. So,
Mhm.
Jim, I want to thank you. It was really creative to, put out the questions of what people wanted to know. Besides everything else you do, you're an educator, and that's an important thing to give people knowledge so that you may never do business with them, Jim. But what they did was they learned from you and they were able to sidestep a landmine here and there, and you've made a difference in their life. So I want to thank you for coming here all these years and edifying the F.A.C.E community.
Well, just following in your fine footsteps, Coach.
Okay, well, don't trip like I do. You'll see. All right. Anyway, Jim, always great talking to you, buddy. I hope you have a wrap up the summer. If we get some nice signals, a little more action in the fall, and look forward to talking to you again November-ish.
Outstanding. I'll be
My,
here.
tr- all right, my trading warrior brother, Jim Carroll. Follow him at Vixologist on X and check out his Substack and educate yourself. Okay, and the VIX is not dead. It just it's like Rip Van Winkle. It may go to sleep for a while, but it wakes up, right? So everyone have a great trading day. You could join the team in 7 minutes on the morning edge, and don't just count your volatility instruments, count your blessings, and I'll see everyone tomorrow. Adios. Thanks again, Jim.
Cheers.
Cheers. You're welcome, everyone.